familiar experience is like using a credit card. In the past, for larger amounts, we would think, I don't want to take out so much money from my pocket at once. So we would usually choose to use a credit card. Of course, not everyone can use a credit card, and not everyone's credit card limit allows for high spending. And in the early days, there weren't many places where credit cards could be used. Now, of course, there are generally more and more, but usually only medium to high amounts are open for credit card use, because credit cards also have a credit card transaction agency, so they will charge merchants as well. So our experience is also like this, that if you use a credit card for purchases, you might be told that if you use a credit card, you need to add an extra 5% fee or a 2.5% fee, meaning the merchant passes the transaction platform fee onto the consumer. But because consumers might think, for example, if I want to buy a set of sofas or a high-priced laptop, say one that costs 50,000, or a sofa set that might cost 200,000, at this point, you wouldn't withdraw 200,000 in cash to give them, right? You would either transfer the money to them, which is one way, but then your account would immediately be reduced by 200,000, so you would use a credit card. The more common scenario for electronic payments is that it makes it easy and convenient for you to pay without having to handle cash, especially in the recent pandemic era. People prefer not to handle physical money that others have touched, as it poses a risk of transmission. Most electronic payments are for small amounts. There is a statistic like this. In terms of transaction volume for non-cash payments, electronic payments account for 60%, but their total transactions only make up 0.1%. So most of them are small transactions. All right, when truly discussing competitive dynamics, there is an interesting discovery we made in our research. According to the predictions of competitive dynamics theory, if the number of actions I take increases, whether targeting consumers, merchants, or banks, it will lead to an increase in Google search volume. Our research found that there are differences from past predictions of competitive dynamics. If competitors take more actions targeting consumers, my registered users will also increase. So where is the logic in this? Although these are actions taken by others towards consumers, they also stimulate other consumers who will feel this buzz. If this buzz increases, consumers might look back and think, hey, which electronic payment tool am I currently using? And then decide to use that tool. Or if a merchant already knows what promotions others have for this merchant, they might in turn adopt similar promotions, thus attracting consumers to register and become users. What is the second stage? If the search volume is higher and the total number of users is higher, then the operating performance of this e-payment institution, meaning the total amount of payments, transfers, and stored value, will also be higher. This is easy to understand. The interesting part is, according to the prediction of competitive dynamics theory, the more actions one takes, the more it should help one's own performance. The more actions the competitor takes, theoretically, it should weaken the effectiveness of my actions. However, in the competition among electronic payment platforms, the more actions the competitor takes towards consumers and merchants, it is actually beneficial for my electronic payment institution. What is not beneficial? It is not beneficial for banks, because electronic financial institutions will collaborate with banks. So they will announce activities like launching a co-branded card with a certain bank, or saying, hey, this bank can exchange points with me, or offer this discount, or reduce the interest rate on this loan, and so on. If the number of actions taken by the electronic payment institution towards banks increases, the total number of users searching for and registering with my electronic payment institution would also increase. The more they both increase, the total amount and total consumption amount will also increase. So my operational performance will be better. However, if the competitors' actions towards the bank increase, it will actually weaken my performance. The same type of YouTube channel will have a similar clustering effect, which will drive more searches for your own channel, and you will gain more users. The scope of mobile payments is very broad. Any payment you can make using a mobile device can be called a mobile payment. But things like Apple Pay, Samsung Pay, Google Pay, or Taiwan Pay do not link their accounts to another electronic financial institution. They just use your mobile device as a payment carrier. So this is called mobile payment. in definition, electronic payment refers to all forms of electronic payments. So mobile payment is actually a type of electronic payment. However, the electronic payment institution we just mentioned is actually a type of quasi-financial institution managed by the Financial Supervisory Commission. Many banks, in addition to traditional bank accounts, also allow us to open a digital account. The digital account and your original financial account are two different accounts. PX Mart and Family Mart have just been approved, but the matter of having a PX Mart digital account is not yet available. When you use PX Mart's PX Pay, what is actually linked to it is your credit card and debit card, or it has its own electronic wallet. So what are the benefits of the electronic account? Actually, you can think of the electronic account and your original bank account as the same thing. Your money is placed with PX Mart or Family Mart. At that time, PX Mart, because it has the qualification of an electronic payment institution, can cooperate with other small businesses. So small businesses, for example, the beef noodle shop next to this PX Mart or the ramen shop beside this PX Mart can use PX Mart's electronic payment. As long as they are a contracted merchant with PX Mart, PX Mart can help with the collection and payment. Many of us have PX Pay, right? So why do merchants choose to cooperate with PX Mart? Because PX Mart is in the community, so more people might be accustomed to it. They already have that PX Mart Pay or the Family Mart, what's it called? Fami-PX. So the merchant is willing to cooperate with them. Of course, merchants don't need to cooperate with just one. Why do they all want to do this? Because data is like gold now. So having member information, especially their consumption data, is something they can use for other purposes. For example, if I know that this user theoretically buys milk every Wednesday or has a regular habit of purchasing milk, then you know that when you promote a milk special or have a new milk product, you can target them, and the likelihood of successfully approaching them is the highest. So this is just the simplest application. There are many more ways it can connect. For example, if you have an electronic account with this company and you make purchases at this store, and that store, eventually the company can link them all together and guide them into similar consumption patterns.